I think you mentioned about the China yields, and I think that the China yields will stay capped and likely to go a bit lower, even though the China 10-year is indeed below 2%. There are some technical factors behind that as well, but obviously on the monetary side, we expect the deflationary pressures to carry through into 2025, and it's quite well known that the economy hasn't really quite rebounded, so we do expect that traders will continue to bet that the yields will stay relatively depressed. I think what's interesting, though, is besides the China bond yield in renminbi, if you look at the recently issued China bond in US dollar, that also has traded to minus 35 bips inside of Treasury.
The Securities Times over in China, of course, a state-backed financial paper, talking about how these yields have limited room to go lower. Does that suggest to you that we could see the PBOC or the Chinese authorities sort of stepping in at a level that they don't feel quite comfortable at?
Well, I think that in the past, they have stepped in to intervene if the yields pulled too wide. But in this case right now, it's the market forces that are determining this, especially when you look at with capital controls, there's actually limited options for investors to invest safely in. And so including, the banks, and the China banks have been putting a lot of money into these bonds because really they don't have enough loan demand. So that's partly also adding to the pressure of the yields going down.